Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Tesla report for Wednesday, April 26th, 2023. Before I jump into all the charts like this, just want to encourage you to please click like and subscribe to the Wicked Stocks YouTube channel and check out wickedstocks.com. By the way, we put out on YouTube Tuesday a 10-minute video on UPS. It's very relevant right now in the news. And I'm sure you've heard all about, that in terms of their weaker revenue and sort of a kind of a leading economic indicator for a potential recession, so forth and so on. Check out that chart. Just know that when you're watching the UPS video on YouTube, we do 2 of those a week that are never landing on YouTube. They are part of a private subscription at wickedstocks.com. Includes the 2 individual stock picks every week, daily analysis in the SPY and the Triple Q, also weekly analysis in the S&P 500, NASDAQ 100, and the TLT, that is the long bond ETF, all of that for a very reasonable $47 a month. And, we offer a 5-day free trial. So if you're not happy within 5 days, you can cancel out and your card will not be hit for the $47 on that first month. So let's take a look at the chart. This is just to remind you, to show you what is the long-term ceiling for Tesla that is actually in reach now, I'm going to say, over the next month or 2. And I say now because we came so close and we're still coming so close to this longer-term support area at 153.72, dropping ever so gradually. This is part of a targeted range of support, targeted for the last few weeks below this channel bottom at 195.49. That became a sell signal a couple of weeks ago when we closed below it, indicating this channel bottom at 153.72. So at 153.72, if we test it today, that is an area where you can cover, presumably, the 155 or 145 out of the money puts, or at least some of them, that you may have purchased several weeks ago when we recommended doing so following that sell signal a couple of weeks ago. And you could also, if we're testing 153.72 today, all the way down to 146.06, a 5/8 downside Fibonacci off the January low against the February high. If we dip into this zone, you could consider buying, 175 out of the money puts. And I can show that right here. 175 out of the money puts, 1 to 2 week target now, or once we test the 153.72 formation. We're coming very close, so we can grow oversold here. And as we're testing 153.72, you could also reach for 205 or 210 out of the money calls that don't expire for at least several months. Keep in mind this channel top here, 223.54, dropping at a pretty good pace, converging later May with this horizontal structure now at 208.82. That'll all be in the the 205 area roughly as we move into later May. So keep that in mind. And so yes, I will once again say that if we test 153.72 down to 146.06, you could reach for either those 175 out of the money calls that don't expire for a week or 2, or the 205, 210 out of the money calls that don't expire for at least several months. So I think I made that point. Let's talk upside today. Still, 165.65 is our meaningful resistance. That is the high of the low that was put out on Monday. So the move low following that February high was put out on Monday. It is 158.61. I don't have it shown here, but the high of it is 165.65, and that has pivot point qualities not only for the day but into later week. If we close above, I could talk about 169.70 being an intraday target above 165.65. That is that gap high from about a week ago. I could talk about 172.92, the low settlement price after the February high, so forth and so on. They're all minor points, but if we close above 165.65 and your time frame is 3 to 5 days, no good reason to be short. In fact, I think you want to position yourself long, then anticipating the 176.08 to 176.52 area, convergent channel top and descending 1/3 speed line based in part on Monday's low. This area, if tested between now and say the end of next week, able to contain weekly buying pressures. And from here, once we test this area, you could then reach for 150, 155 out of the money puts, because once we test that 176 08, 176.52 region, we can fall back into the 153, 154 handle. Let's talk downside today. I have 154.39 as a minor point only, but it really is 153.72 that I'm zoning in on, and 146.06 is the 5/8 Fibonacci, January, February. This is the zone, as I've been saying for a number of weeks, able to absorb selling, not only through May, but even through June. And once tested, we could rotate higher again into the low 200s. Let's just call it kind of a moving target, always a moving target with me, these channel formations and line studies. But this would be the area that I would anticipate within a month or two of testing this 153.72 formation. Now, if we do, and I don't see this today, and I don't even see it this week, I don't see it at all, actually, but if we were to close below 146.06, the January low way here lower left at 101, I think it's 101.68, it's 101 and change, becomes our next 2 to 3, 3 to 5 week target, where we could actually potentially double bottom down here on a monthly basis. But I don't think it looks very pretty if we settle below this channel bottom. I think you play the short side until proven otherwise. Closing below 146.06, we could unravel in a significant way. At this stage, I'm comfortable saying merely back to the January low, but it could even get uglier as we move into the later third quarter. But not until we close below 146.06. Until then, holding above 146.06 and above 143.72, this narrowing range allows this market to grow oversold on a near to midterm basis. Near term, once again, we can rally into the mid 170s over the next week or two, and over the next month or two into the very low 200 area. So I think that pretty much rounds it out for Wednesday's Tesla report. I will leave you with the very chart you're looking at. I'll be back tomorrow with Thursdays. Please click like, subscribe, and check out wickedstocks.com.